All right, guys, welcome to lesson two. So sorry to those that didn't tune in that I'm only recording now. I had a bit of a hiccup with my OBS. It didn't pick up my mic because it wasn't plugged in when I started my computer. So for now, I know the issue and how to sort it out. But anyway, we had a good lesson last night. Looking forward to Wednesday's lesson. Uh, let's just go over a current trade that I'm in. Euro New Zealand dollar. We took liquidity on the upside. We had a change of character, came back into an order block, and I went short. Now I'm looking to take partials out in this fair value gap here below the 50% line, which means price comes back into a discount for a buy. So if they fill out the liquidity here, if you look on a 4 hour, this is the fair value gap here. And then also targeting these lows. So what I'll do is I'll take 50% of my position off here, find another high around here that it creates, put my stop loss above that, and if we continue market structure to the downside, my take profit. I don't usually set a take profit because I like to see the momentum coming through this candle. If it does carry on, we could take out these lows potentially. So I don't set a take profit, I just set an alert when it's getting close, and I like to watch the price action. So I'll look for like a 1 hour candle closure underneath this and see what the next candle does. Does it carry on down? And we can see the move is happening nicely here for us, pushing down nicely. We can see market moves from liquidity grab to liquidity grab. So that's part of this lesson today is how the market moves from liquidity to liquidity. We can see equal highs here. The definition of different liquidities is equal highs, lows that haven't been broken, and fair value gaps. Those are your liquidity zones for the sole fact that people's stop losses are here going short. Um, the market likes to manipulate these zones for the likes of your support and resistance traders so that they would think, oh, resistance, let's go short here. And you know how resistance traders work. They look how they look for a what do they look for? They look for a bearish engulfing, so they would only get short in here, possibly with their stop loss just above here, and then look how the next candle just literally pushes through and breaks all of their stop losses out. So different types of liquidity is their value gaps and equal highs slash lows in the market. You can see many instances of this where they create equal lows to take liquidity on the downside. So what do I mean by the market moves from liquidity to liquidity? Um, the only way that these massive organizations with huge amounts of money can get in the market and make billions and trillions is to set up people to fail. So that's what I talk about, setting up equal highs to then grab liquidity to then come down. So now we know that there's been a liquidity on the upside. We're now looking for a liquidity grab somewhere on the downside below this 50%. In here, we've got a beautiful fair value gap. We've got a low here, and if it carries on, there's another low down here. So this is where the next liquidity grab will come. And how do we know that the liquidity has been grabbed enough for the market to move the other way? Well, we look for the liquidity grab one, and then we look for a change in market structure to the opposite side. So we had a perfect order block in there. We didn't get enough push down to use this order block here, the breaker block. Let me go over the breaker block now for you guys. So last night I went over order blocks for you guys. So if I can just let me open up another chart so I don't mess around with this. Just maybe open up gold. I was obviously drawing on this one last night. let's go here. So different looks for order blocks. The guys that were on last night will know what I'm talking about. But just for you guys that weren't on, and if you want to go over it again, here we go. These are usually what you see at an order block zone, these type of candles. Why? Because there's a lot of orders and it's building up lots of positions. So a candle will either look like this or look like this. As I did say, it doesn't have to be perfect. It could be like this. It could be like this. But around similar to these candles is what an order block will look like. Now, when the market's going up, find your order block in here, below the 50% line, and we're looking for that move that went like this to then break the structure. So this is your continuation order block. Which order block caused the break of structure here in the market when the market's going up? There's a break of structure. Which order block in here created this move to break the structure? This is your continuation order block. Again, will look something like this. Now, when we look for reversals, a hard reversal, this is something that I haven't taught anyone in the free side of things, and this is exclusive to you guys in the mentorships, is something I like to call a breaker block. Markets going up, change of character, into there, then down. Let me draw that again so it's a little bit bigger. Markets going up, massive move down into there. Now we saw on Euro NZD, we didn't have this amount of movement down. We came something like this into an order block here. But when you have these massive moves, usually it comes up to an order block from a previous structure here, in here. So we like to call that a breaker block. You look to the left, there's usually a fair value gap set just below this over here. So over here, and then an order block to the left before this move that broke down. So we're not looking for this order block here or here. We're looking at this fair value gap. Why? Because that's enough liquidity to be filled, because it's had such a massive move down. There's going to be fair value gaps in here, that enough liquidity is being taken here. That opposite move, accumulation of orders will be enough to move this market on the way down here. So this is called a breaker block, and this is the reversal or change of character order block with fair value gaps left by a large move, breaking, changing character. Okay, so those are your two types of order blocks that I look out for. Using fair value gaps as a gauge there. Your continuation is your order block. Okay, let's go into some examples here on the daily for gold. Let's just move all drawings. So you guys are familiar with this. We went over this for our homework, but we have a look here. Okay, so remember what the candles look like. We have a change of character with a huge fair value gap here, and there is a breaker block, order block, right there. Let me zoom in so you guys can see that a bit better. But you see how that candle's shaped. Again, I said last night, this is something I haven't taught free people, and I won't. This is exclusive to the mentorship. You see how your fair value gap is in here. Fills halfway of that fair value gap, which mitigates the fair value gap, taps into your order block, your breaker block, and then shoots down. Now you're probably thinking, why isn't this candle white? Well, we could have used this candle as well, but I like to use the look of the candle a bit more, because the previous candle manipulates what this candle's color would be. So every time it wouldn't be the exact color you're looking for. So it doesn't have to be a white, Doesn't have to be a blue, but most of the time it will be the last down move before the up move, and vice versa, the last up candle before the down move. So there's an example of a breaker block, and then here's an example of a continuation block. You can see that. What caused the break of structure here was this candle here. Boom, broke structure, came back into it 3 times before going down. Then we have a break of structure here, so we can look for an order block, and there's a perfect one in there, giving us such a nice risk to reward trade on this one. So if you went short on this order block, you left your pending order here open. Sorry, that's a long. Stop loss above there, targeting these lows, because we know if we've grabbed liquidity on the upside, because there's a huge fair value gap here, they're going to grab liquidity on the downside. So your target could be here. And then what does price do when it goes through here? It goes through extremely quickly. So I would have held on to this trade. I would have gone down to maybe a 15-minute time frame. Let's go back to that trade. 15-minute time frame, and then I would have got out right here. Oops. Right here. Why would I have got out right here? Well, we see this massive move go down. Price consolidates a bit. We still haven't broken this high. We come back up into another order block here. So I would have ridden it down to here, seen that we're not going to break this, and we would have watched for a change of character here. So this here, this move right there, let me zoom in. This is your change of character here. Boom. So I would have waited for price to settle in a bit, and in this zone I would have taken my profit here, because now we know market's changing to the upside. It's grabbed its liquidity of this low, this previous low, grabbed its liquidity from this low, and now market shifts to the upside. Okay, so we would have had a nice trade there. Okay, so now that this video is recorded, everyone can go back and check what breaker blocks are, what normal order blocks are, etc., etc. Let me just go over my notes. Okay, another thing is what I taught was the higher time frame. We look at where the liquidity is. Where was liquidity last grabbed? Liquidity was grabbed here last. So liquidity on the upside is next. We have grabbed liquidity all along these zones here. These highs is where stop losses are. We're on the monthly now. So these are monthly levels that have been taken out. Next level is here. If we do see a market reversal somewhere in here off an order block, and we leave this liquidity up here, then we can expect price to come down and grab this liquidity down here. As we can see, there's a few fair value gaps left along the way. So this would be the next drawn liquidity once we have determined that liquidity has been taken on the upside enough. How do we do that? We look down into the lower time frames at our order blocks after fair value gap here. If this order block creates a change of structure, then we know we've grabbed enough liquidity along the way to then head to the downside. Otherwise, the next target of liquidity is these equal highs up here. These equal highs get taken out like this, like we saw in the Euro NZD chart. And we come back down, boom, and we'll start coming back down. So that's how we know that the market moves from liquidity to liquidity, and how we can use the higher time frames to give us a bias to where price will go and where price will change character. So this is where I always start the month, is looking at the monthly, marking out these levels, then going into the weekly, You can see it a bit more clearly. You can see bigger fair value gaps left along the way as well. Then down to the daily, and then from the daily is where I start plotting, okay, this week is where I'm going to be trading. With gold, we've grabbed a little bit of liquidity here, but I wouldn't be happy to go short yet until I see this zone mitigated. Because if we look on the Fibonacci, we are just in the 60 zones, and I prefer a move around here in the 79. It's a more aggressive move down than the 60 move. The 60 move would just consolidate for quite a while, and we're on the daily time frame here. And then we'd use 4 hour, 1 hour. So this is what I said last night. If you are trading the daily range, look for a 1 hour change of character. If you are trading the 4 hour range, basing your entry off the 4 hour, you would look for a 15-minute change of character. The 1 hour, a 5-minute change of character. These are the 3 time frames that I look at for my trading. Daily's more like swing. 4 hours, like you're in for a day or two. 1 hour, you normally in for 1 trading session or 2 days. And we can see gold on the 1 hour making a change of character. We'll go back to the daily. Still not really convinced about this. I wouldn't get into gold anytime soon because of the strength of the dollar right now. So, and I'm pretty sure there's news coming out this week. So that's another thing to consider. So being over the higher time frame, use that as your bias first of all, then go lower. Another thing, guys, is remove drawings. The StratoFX SMC indicator showing all breakup structures, order blocks, equal lows for your liquidity. See how equal lows equals a weak low. So this is the next drawn liquidity. Once we reverse, we've created a change of character here in the daily bias. So we're looking for shorts. Puts this perfect order block for you. This is why I said I want to come maybe to this zone first. A strong high is created here because of this change of character. Because remember what I said, if you dollar the low, you won't dollar the high. So that creates a strong high. But anyway, going through the final phases of getting this up on TradingView as a paid indicator. I think I'm going to maybe do it for $200 a month or something. I mean, TradingView itself is more expensive than that, the pro account. So this will just help you guys save time in finding market bias. See how the change of character changes it from red to green. So it would only look for green order blocks to be filled. And then see how we change character to red here. Now it's got red order blocks. Change of character happened here. Now we only got blue order blocks, which is for the buy side. So you would only buy until you hit this red order block here and saw a change of character here. But say price came down into here, this is still a valid buy in this area. Or probably more so towards this one, but at the same time when you come in here, you're looking for a change of character to the upside. So that's just a little plug for the indicator that'll be out probably end of this month or when I'm back from France. I'm still working with my developer on getting this up on TradingView. We have to pay a monthly subscription to put it up. That's the only reason I'm going to charge 200 Rand a month, is because I think I have to pay around $200 a month just to keep it up. Something like that. I can't remember if it was 50, 100 or 200. But anyway, so in saying that, liquidity is what drives the market. We move from liquidity to liquidity, and we use that to find where the most likely move will be, because we can determine where did it take liquidity last. So we took liquidity on the downside. You're moving up to take liquidity on the upside, fair value gaps along the way, and stop losses for people going short. So that was just a little quick recap in 20 minutes of what we did last night in an hour. Obviously, we did the homework first, so we went over it a bit, and I took questions throughout. But this is what we covered last night. I hope everyone understands. If you've got questions, you can always just put them in the Tier 1 general chat, and I'll answer them there. Please don't put any Tier 1 questions, homework, etc. in general, as we've got freeloaders in there, and I want you guys to have the privilege of having this information, etc., to yourselves, because you are paying clients. I'm going to do some breakdowns of some pairs tonight, so look out for the Strada's Trades tab. I'm not going to put my entries on, I think, Strada's Trades, but I'll put my entries on the Tier 1 trades so that you guys can see when I'm taking a trade, etc. And yeah, I'm going to be recording some YouTube videos, some free YouTube videos this week as well, and a couple of TikToks and stuff like that. So there's some free content coming out soon. And what else can I let you guys know? Yeah, okay, and the homework for this week, for everyone that didn't know, I want you guys to draw out equal highs, your fair value gaps on the daily for NASDAQ from November 2021 till today. I've given you 2, 3 here. Here's a fair value gap. Here's your equal highs. Here's your fair value gap. So mark out all your liquidity zones for me. There's another one for you. Okay. So where would the stop losses be, and where is the market being inefficient? So you can see how the market used this order block here after this inefficiency to then reverse price. So we can see how the market moves from liquidity. So it took liquidity to the downside to taking liquidity on the upside of all these people here. Boom. And this fair value gap here. Cool, guys. So if you can just mark out your charts, show me liquidity in the market, and then we'll check you on Wednesday. Peace, guys.